Alright everyone, Cowboy Trades here. Welcome back to the channel for a super quick update on Bitcoin. I've got some bad news for the Bitcoin bulls. Here's 3 major reasons why the breakdown we're witnessing in the markets today is just getting started. Starting off with the first reason the breakdown is just getting started. If we're looking at this fractal which has been playing out, we warned you about this on the channel. The price action when Bitcoin was making all-time highs broke up, broke down, made a higher high and topped out. The price action right now broke up, broke down, made a higher high, and now it's starting to break down. Look at what happened on the stochastic RSI during Bitcoin's all-time high. This made a double top. When we had that correction, we only corrected to round about the heart line before breaking up and making that double top. And look at what's happening right now in the price action. We broke up, made our first top, broke back down to about 80, and we've kind of solidified this double top on the stochastic RSI right now with this bearish engulfing candle on Bitcoin, and also rejecting from this major box, which was previous support throughout the entire bull market top. This has now been reverted back into and flipped as resistance. That's the first warning sign. That's the first reason why the Bitcoin breakdown is just getting started. Stochastic RSI has a lot of room to move to the downside. The second reason why the breakdown is just getting started for both Bitcoin and the S&P 500 is our volatility metrics. Now, oh my days, the VIX is up 13.5% today. We've got other volatility metrics such as the CBOE implied correlation up almost 10% today. So what does this mean? If you want to look at cryptocurrency channels and you don't really understand the VIX is the volatility index for the S&P 500. What this does is this gives us a data point. We divide this data point by 16, and this number that we get basically tells us how much the S&P 500, the equity market, should be moving on a day-to-day basis. So the VIX is right now saying that the equity market should be moving negatively about 1.18% to the downside. If we're looking at the equities right now, you can see that is right on par. If we're looking at the S&P 500 at the bottom of the screen right now, you can see every single time the VIX came into this major support box, support here, support here, support here, support here, support here, support here, we bounced back out of that range, and every time that happened, S&P 500 down, S&P 500 down. If we overlay Bitcoin as well, you can see these data points are very clear. If we actually overlay this bottom in the VIX back over here before the major rally, you can see this pretty much correlated to the top in Bitcoin as well. The VIX took a tear to the upside, and Bitcoin, which we will mark as orange just to make it a little bit easier so you can see the correlation between these different markets over here. There is an undeniable correlation in these charts. The VIX takes a run to the upside, your equity markets and Bitcoin starts to break down to the downside. So this is reason number 2 on why all of the markets, specifically the S&P 500, should be breaking down a lot on a day-to-day basis. But also, of course, we'll know that Bitcoin will follow along with the S&P 500, which it's currently doing right now. I mean, honestly, look at the 4-hour time frame as I'm recording this video. The VIX is taking a tear to the upside. Volatility is about to return back in a major way. This is terrible news for the Bitcoin bulls and the S&P 500 bulls. The third and final major reason why this is bad news for the bulls, and of course the third and final reason why the breakdown is just getting started, is if we're looking at this asymmetrical triangle on Elliott wave theory. We are currently in a falling market, also known as a bear market. We know this because we've fallen into this triangle. And how did we fall into this triangle? We had a bearish 1, 2, 3, 4, 5 wave into this 5-wave asymmetrical triangle. Now in a falling market, you have a, you have a B, you have a C, you have a D, and then you have an E wave at the top of the asymmetrical triangle, and this is when you basically immediately start pinging down to the downside. So for your S&P 500 right now, things are looking absolutely dreadful. We are literally at a pivotal moment, letting us know, of course, with the VIX taking a tear to the upside, as we're coming into this major area of resistance, whether you want to call it Elliott wave theory, whether you want to call it this chart pattern, whether you've kept up to date with the channel and you look at our on-chain metrics videos for smart money and corporate insiders, whether you want to take into account that insiders are selling, smart money selling, we're at resistance, Elliott wave theory is topping out, oscillators are topping out, volumes topping out in the markets, the liquidity spread is very thin and bearish volume is coming back into the markets. There's a million different reasons you can associate with us topping out in this chart right now, but this chart kind of just paints it in a very, very simple way. The breakdown is just getting started. So where could Bitcoin break down to, and where could the S&P 500 break down to? So first of all, where do I think the S&P 500 is going to? Now, just ignore these vertical lines over on the chart. This is a different chart that I have somewhere else. I will show you what this is a little bit later on. But what we do have is, of course, we've got this asymmetrical triangle, we've got the E wave, the markets, Elliott wave theory, everything is predicting that we should be breaking down to the downside. To what price target? Well, we actually have a big fair value price gap all the way to the downside here. You can see over on the 10th of October, we closed the week all the way down here. And then what did we do? We opened all the way up here at 3,639 on the 17th of October. So we do have a price gap to fill all the way down here at 3,579. We're looking at where the S&P 500 is now and how far this is down. This is about a 503 point drop to the downside, also known as a 12.34% drop. Definitely a brutal drop for the S&P 500. But where could Bitcoin go to? Plain and simply, 12,000 to 14,000. I could give you 100 reasons why, volume profiles, you know, looking at market caps, looking at where we should be dropping down to. I could show you multiple chart patterns, but plain and simple, 12 to 14,000. This is a major, major area of volume. And also, I mean, where else are we going to bounce from? We've had a parabolic run to the upside. There's not really many support levels that we could have had established other than, you know, this range here, which is what we bounced on. Obviously, where did we come back up to? We came back up to this range over here, which was resistance. So as you can see, I mean, we have been stair-stepping in this market, but this area over here, this green box, is where we bounced from. This was the only support we had in the market. You can see this was support, 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 this was support. We broke back up. We're getting rejected from the resistance. Where is the next area of support to the downside? 12 to 14,000. Plain and simple, that's where we're going down to. So there we go, my friends. Those are the three major reasons why I'm currently extremely bearish on both Bitcoin and the S&P 500, and why I think the breakdown is really just getting started. If we wrap up on a 30-second talk on Bitcoin, if we do zoom into the weekly time frame right now, you can see with this weekly candle that we've opened, we actually wicked right up to 28,000 yesterday. You can see, boom, 28,000 rejection, big doji candle, smaller doji candle. We are bear flagging right now, showing major, major indecision in the market. Bitcoin just looks extremely weak to me, especially after coming up and retesting 28,000. I really don't think there's any reason why we shouldn't be breaking down at this moment in time, especially after that brutal $28,000 retest. And of course, at the end of this week, we have the monthly candle body close. Not only did we have an important weekly close literally, you know, a couple of days ago, which we talked about in a video, if we now close beneath 28,000 on the monthly time frame, it's curtains, ladies and gentlemen. So for today, my friends, that's all I've got. If you do enjoy my content, as always, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want more of my content, feel free to follow me over on Twitter at 618_cowboy. I really do recommend that you follow me over on here. I do post multiple charts outside of what I just include over on my YouTube channel. Sometimes there are some small charts or just some small thoughts that I do want to share, which won't make it over to my YouTube. So if you want more of my content, this is the best place to come and get it. Like I said, all I've got for you for this video. It's been your boy Cowboy Trades. I'm out. Peace.